Today's topic is South Florida. That's 3 metros for you, so it takes 2 of us to handle that. Welcome to Apart Market Dynamics from MPF Research. I'm Jay Parsons, and he's Greg Willet.
Really, you could handle this by yourself. It doesn't take 2 of us, but you have that new baby at home. You're sleep deprived. I'm here just in case you nod off.
And I can't promise that won't happen, and hopefully we could stay within our usual range of 1 to 10 takes for this particular video shoot. But the pressure's on you to be informative here.
I won't make guarantees there. Let's talk about what's happening in the South Florida markets. Our favorite phrase when we get to these markets is always 2 steps forward, 1 step back. And you saw that again in second quarter. And let's focus on the good news, the 2 steps forward part. And for that, you really look at the Fort Lauderdale area. Had a pretty strong quarter. You see that especially in terms of demand. Let's bring up a chart for you here. What we've got is demand over the past 4.5 years by quarter. And you can see just how erratic it actually is. And this is a spot where you've got to grab the demand when the opportunity's there, and operators really did that in the April to June timeframe. Absorption came in at 1,864 units. That is a 2-year high for them on a quarterly basis. With that strong quarterly demand, occupancy jumped a full 100 basis points during that 3-month period, now at 95.6%. In particular, I'll point out that the 1980s and 1970s generation product did well during the quarter. Occupancy now is getting up to levels close to what you see in the top tier. So some good news there. Let's go to another chart, this time looking at what's happening on the rent growth side. We've got annual rent growth by quarter again since early 2008. What you'll see here is that the chart looks a lot better toward the tail end of this period than it did at the beginning. Broward County saw rents go up 3.8% during the year ending mid-2012. It's a little bit below the national number, but still a very solid performance. Furthermore, a lot of that growth really came specifically during second quarter when effective rents jumped 1.8% just in that 3-month time frame.
Greg, let's move south to Miami-Dade County, where the quarterly momentum wasn't quite as strong as we saw in Broward, but certainly some very solid numbers here. Let's start with the demand story. Here's the demand going back 4.5 years, and it displays a bunch of volatility from one quarter to another. But the endpoint there for Q2 specifically, 1,026 units absorbed. And part of the reason that demand number isn't any better is simply because occupancy is much tighter here. We're getting close to 97%, actually at 96.9% as of Q2. So that puts it above Fort Lauderdale. And as for the rent change numbers, we'll take a look at that. The annual increase came in at 3.7%. That's right in line with Broward County's number. Specifically during Q2, we saw an increase that was more modest, though, just 0.5%.
All right, Jay, now that was your heavy lifting for this video. If you need to take a nap now while I talk about West Palm Beach, that's actually okay.
All right.
We'll look at the same set of numbers for Palm Beach County, starting with that 4.5-year demand period. What we see there is, well, first, the quarterly shifts are smaller here, and that really just reflects that this is a considerably smaller market than either Miami or Fort Lauderdale. For 2Q specifically, the demand number was 385 units. That was enough to boost occupancy by 50 basis points, and overall occupancy is now at 94.8%. That's a little bit lower than what you see elsewhere in South Florida, but that gap is closing, and this one really had a pretty big hole to fill in. Back in the downturn when we were in 2008, occupancy got all the way down to right around 91%. So some good progress being made there. Same story if you look at the rent performance, that we are getting a little bit stronger in this market. Again, the annual rent growth by quarter for the past 4.5 years in Palm Beach County shows the current number at 4.1%, actually a little bit better than either in Dade or Broward counties. The pricing power really does move around a whole lot from one quarter to another in this one, and we promised an example of a one step back in the two steps forward, one step back pattern, and here's where you see it. Is in the pricing in Palm Beach County for second quarter, when the effective rents for new leases actually came down 0.3%. And that follows up after a quarter when they had gained more than 2% to start off the year.
And Greg, since you've made sleep deprivation a theme here, I need to ask a question to prove I haven't dozed off at all. And that is that ongoing construction across these three South Florida metros totals 4,159 units at the end of Q2. And so is that too much for an area where total employment really doesn't match up to what we see in terms of total housing inventory, what's been built over the past decade or so, and for an area also that just isn't seeing the same pace of job growth that we see nationally?
If you look at that big picture and do think about the total housing marketplace, and not just apartments, but also for rent, either single family or condo product, and then as well as for sale units, there's too much housing supply relative to the job base. But if you look at top tier apartments specifically, they are really full. And keep in mind that the inventory of those units is a lot smaller than it was several years ago because we took so many of those out for condo conversion. So what's under construction right now, I think we can feel pretty confident that product's going to do really well as it starts to come online in the next few months.
Thank you, Greg. And that wraps us up for South Florida. So until next time, for Apartment Market Dynamics and MPF Research, I'm Jay Parsons. Thank you for watching.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, MPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.